Alright, welcome everyone. Hey, what's up guys? Hello, hello. Welcome everyone, welcome. Alright, we'll be starting in a couple of seconds here. Just let's wait a few more seconds as people get the notifications that I'm live. All right, let's begin. Okay. Hopefully everyone has been doing great so far today. We're going to be talking about something that's been in the minds of everyone who is involved in the markets, but I kind of want to go deeper into where we're at right now and kind of get a better market bearing as to what the AI revolution has done for the entire software sector, as it says in the title and in the thumbnail of the stream, obviously. Right? I have a question here, right, laid out for the stream. Is software collapsing? So we're going to try to discover what the actual answer is and how AI is starting to actually really give us the clear answer as to what we should be looking out for and what we should be expecting into the end of this decade. All right, so the next around 2.5 years. Okay. All right. Let me give out one more notification here to my Discord community that I am live. All right. Here we are. Okay, so first of all, let's go do a quick review on how the markets performed today, right? So Nasdaq and both Nasdaq and the S&P 500 ETF, or ticker symbols QQQ or SPY, respectively, they had a pretty solid day, pretty low volume pullback. We're basically seeing post OPEX flows and price action. Now I do want to notify you guys here that SPY actually made a lower low compared to last Thursday's low, and QQQ on the other hand was a bit more stronger with a nice higher high and a nice higher low at the close. Now, okay, here's the thing, because we had to check futures markets here because futures markets are actually moving lower, and even though in futures, you know, we're still seeing basically consolidation on Nasdaq here, or even just on SPY futures, right? There is a little bit of an underlying worry that I think everyone should think about as we head into tomorrow, because again, usually post OPEX we tend to see a weakness, even though that hasn't really been present for the last couple of months in this entire year, but as kind of the seasonal trends start to come back, especially after such a historic rally, I would expect to see some sort of convergence of seasonality plus some very needed consolidation and pullback in the markets, right? And you know, I think overnight we're kind of starting to see that slightly. I'm not going to expect, you know, a major decline. I mean, maybe we do see that tomorrow, but again, Tuesdays tend to be what we like to call turnaround Tuesdays, right? Especially as we've been sitting right underneath these all-time highs. But if you guys read the report and the market summary, I did also state that it wouldn't be such a weird idea that market makers would try to use this time where the markets are currently near all-time, just inches from all-time highs, to continue to sell massively, right? And that could potentially cascade into an actual market technical pullback. Does that make sense? I did also warn everyone in the report that you know, JP Morgan has warned everyone. Well, they're basically telling us, the retail investors, that we have will be selling $165 billion in equity or assets as they rebalance their portfolio in preparation for the second half of this year, right? So H2 of fiscal year 2026. But again, that's really not that big of a news, to be honest. It almost seemed like JP Morgan was just trying to, cause a lot of FOMO. Maybe they want retail investors, not FOMO, but a lot of FUD, right? They really want to see maybe retail investors dumping prices at these highs here, which will allow institutions like JP Morgan to buy shares at a cheaper price as they head into the last half of this year on certain leading companies that they may have been less exposed to in the past couple of months or in the last 6 months or so of this year. So who knows, right? But again, it just kind of felt odd that they would just, blatantly just announce that, right? I mean, we already know that they have these quarterly rebalancings, right? And it tends to be a very major quarterly rebalance when we're in the very first half of a fiscal year. So again, pretty much knowledgeable, very much a widespread knowledge that people know this. So again, I really think, in my personal opinion, that it's basically FUD. But we will have to see, right? They could be basically formulating a technical pullback because they just want to see one, right? And also seasonality trends match up during a midterm year, right? If you're just simply talking about the presidential cycle, the 4-year cycle, where the midterm years tend to be very volatile, starting right smack in the middle of that given year. And right now we are in that midterm year. We might just be seeing that type of volatility coming back, and that seasonality trend coming back, as well as July tends to be kind of the highs of a market before we start that technical correction of around -5 to -10%. Again, the textbook range for the percentage move lower on a technical pullback is from -5 to -10%. And if it's greater than -10%, once it starts to reach -15 and -20%, then that's officially a bear market. All right. Okay, so with all of this in mind, let's go over software. Okay, so I briefly touched on software and its relationship with semiconductors a couple of live streams ago. I think about 2 live streams ago, maybe two or 3. Yeah, I think it was 2 live streams ago, but I was essentially telling you guys that I really think this is kind of a faux run up. it's basically an oversold bounce in the software sector that we were looking at in the last week of May, and this is just a very much needed relief for any of the buyers who are buying around this area, as software basically consolidated into a massive broadening wedge here. Obviously, I've deleted this the last time I showed you guys here, but this is the broadening wedge, okay, and this is the resistance level, right, of the wedge, and it tends to be a bottoming signal, right? And during this time, the buyers are really just being whipsawed back and forth, and eventually they're able to see some light as the price officially held over $89, which, if you guys remember, I think I gave you guys yeah, here it is. So I gave you guys a nice early entry point, bounce entry, all right, entry point, actually a nice bounce entry point over $82.10, and eventually we're able to see $89 and eventually even much higher prices after that. So now that we have basically made a complete round trip back down and now we're below $89, we need to reassess what we're looking at with software, because this definitely confirmed. I would say even just this entire round trip back to $89 is enough evidence for me. But the fact that we were actually closing below $89 today, and we even broke below last Thursday, clearly demonstrates that there's a lot more weakness in the software sector compared to the semiconductor sector, which obviously again makes sense since we are in this AI revolution, and hardware and the actual infrastructure that makes AI work and run should be getting more of the attention. Now here's where software has become completely destroyed in the past, I would say in the past like 9 months now at this point. So starting from like October of last year, right? So around 9 months, a little over 9 months. Software has become more of a topic of how much can software companies be disrupted by AI, and we have seen the the potential of that to be absolutely massive, right? Because AI continues to adapt very, very quickly, right? Just like snap a finger, if there's some sort of an internal mistake in an AI software, right? It gets corrected fairly quickly, right? And it just tells you how fast things are moving when it comes to AI and AI software, right? And companies who are very heavily dependent on software and their own in-house software, and obviously they're very dependent on developers, right? Actual human developers. Those companies have absolutely been decimated in the markets, right? If they're publicly traded companies, and it clearly demonstrates that the signs that we've been seeing since like 2024 or 2025, where I believe it was late 2024. But if you guys remember, there was a huge drop-off in software engineering jobs, right? So all the posted software engineering jobs, if you compare them to, I believe it was 2024, late 2024 to all the previous years before that, there's a huge drop-off. In fact, it's still at lows, at massive lows, right? And the demand for software engineering jobs might just have been the leading indicator for what was coming for software because of AI, right? So again, it kind of seems like AI should have been a huge beneficiary for software, especially if the actual hardware, right, that builds the AI infrastructure, again, semiconductors is the major leader there. If there's relative strength in that sector, it kind of would have made sense for that to snowball down and expand that relative strength to software. But that is not the case because the disruption has been too massive, right? This reminds me of the .com era as well, where there's a massive switch and massive change in the actual tech infrastructure, right? Technology infrastructure that previous companies weren't able to keep up with just the overall underlying change in the tech infrastructure, and at the same time couldn't benefit from those specific changes. And that's kind of exactly what we're seeing now, where as I've already outlined, I think a couple of years ago, I think 2 years ago, right, when I believe ChatGPT came out from OpenAI like November of 2022, but I highlighted in early 2023 that we will start to see AI winners and AI losers, okay? And clearly this year we have been seeing a very major shift in that direction, right, where we're seeing AI winners and AI losers. So we're also going to be talking about those specific tickers as well. But what's very interesting to me is that IGV here, right? This is the tech software ETF, and from what I remember here for IGV, its holdings here, its top 10 holdings, come from, okay, here it is, right? I believe is. Well, first of all, I know it's Microsoft, right? So Microsoft has been absolutely dragging IGV down, right? And I think PLTR, right? So Microsoft and PLTR are one of the top 3 holdings, right? If I'm not mistaken. You guys can fact check me on that right now. That's from my memory, okay? So hopefully I'm right. I believe it's the top 3, either top 2 or top 3, okay? Oh no, wait. The other ticker is PANW, Palo Alto, okay? So obviously there is some sort of divergence here between all these 3 tickers. Yeah, okay, I'm pretty sure the top 3 holdings. Yes. Oh no. Wait a second. Okay, yes. I am correct. So it's Palo Alto, PANW, right? Microsoft, or I guess let me do it in over here, PLTR, Microsoft, and ORCL or Oracle, okay? So I've just gone through these 4 tickers alone, and what did you guys notice, guys? What have you guys noticed? Only one ticker, right, has been in a solid uptrend. So even within the software sector, you can clearly see, even just in the top 4 holdings that I've just shown you guys here, right? So again, Palo Alto, right? PLTR, Microsoft, and Oracle, right? Clearly, there's only one ticker out of those 4 tickers here that are doing extremely well. And based on this price action alone, guys, right? This clearly indicates that this company has been absolutely been a beneficiary to this AI revolution because they have been successfully implementing AI, right? They probably have their own in-house AI, whatever it may be. I'll have to do specific research on this company if I want to take a look at this one, but now I'm not really right now, so no need to look at that. But just based on the market price action alone, right, compared to Microsoft, okay, Oracle, and PLTR, right? There is definitely some sort of divergence going on within the software sector itself, and that's exactly what I was looking at and stating back in early 2023, that we'll be seeing AI winners and AI losers. Okay, this is all making sense. Hopefully I'm not rambling on. Okay, all right, I see your guys' reactions there. Thank you. All right, so what's very interesting to me, okay, so let me actually show you guys the ratios that I was talking about I think a few live streams ago. I think it was 2 live streams as I've stated earlier. So this is the SMH over IGV ratio, and obviously what an amazing run, right? I mentioned this last two weeks ago, I think, yeah, so around here, and what a massive push up higher again, right? But here's the thing, all right, I do know that semiconductors are in need, from a broader perspective, right, in need for a technical pullback, okay, and market correction even at this point, right, because of how extended certain leading semiconductors are, and just the overall, right, sector itself, right, the overall group here itself is very, very much extended, right? We're kind of in this bubble-like territory here at this point. So if you take a look at SMH, and if you take a look at even just the inverse bear ETF, the leverage in the ETF here, right? This one has been massively pushed lower, right? This is back down to single digits here, right? In a couple of months, right? So yeah, in 3 months here, what a move lower here, right? So there's clearly just overall, I would say, complete love for semiconductors here. If you just take a look at the ratio between SMH over IGV, and if you take a look at the opposite of that, right, IGV over SMH, this looks like the chart that I've just shown you guys, right, for the inverse leverage ETF, right, SOXS, right? So IGV over SMH, right, and if you guys are wondering why I'm looking at this, well, again, it clearly tells you which group, right, which subgroup in the overall tech sector is leading, and semiconductors are obviously leading. But it also gives you a great insight as to where a potential technical reversion could occur between these two groups, right? But here's the thing, I honestly, right, so this is my answer for is software collapsing, okay? I think yes, indeed it is, because even if semiconductors start to pull back, I don't think, even just based on this ratio, IGV over SMH, I don't think we're going to be seeing a very large reversion anytime soon. Sure, we might be seeing a nice oversold bounce, right? I mean, if you just take a look at IGV over SMH, right? If you take a look at the last week of May, here, let me even show you guys what I see here. Okay, so IGV in the last week of May, this is where we had that really quick oversold. Or it's not even oversold anymore. It was just a much needed reversion to the upside. It was just a very quick one. And I also gave you guys my reasons why I didn't really trust this big rally to the upside, right? I believe I said this in the last, in the third, or 3 streams ago, if I'm not mistaken. Either way, watch my streams, all right? Watch my replays that are posted in this channel, right, on this channel here. So, in the last week here of May, right, in the last week of May, we had a pretty big 3-day winning streak. But if you compare this, what we see here, right, the magnitude of what we saw here. So let me just give you guys a quick percentage perspective here, right? So from the open of this candlestick here, right, on May 28th, all the way up into the closing price of June 1st, right? This is a 15.50% gain in 3 days. But look what happened on the ratio here, on the ratio side of IGV over SMH. Okay, we're going to do the same thing here. Right? Obviously the percentage doesn't really matter here, but I'm just trying to show you the magnitude, right, of the move. Right? This one only went up almost 13, a little over 13%. Right? And from a broader perspective on this ratio, I mean, what a small move. Right? This is drastically a greater difference in magnitude compared to what we saw on IGV in the last week of May and into June. So again, this is kind of what allowed me to be a bit skeptical, and the reason why I showed you guys these two ratios, right? Obviously you guys can interchange them, right, to really gain an understanding and a broader market bearings as to what the leaders are doing and what the laggards are doing. So I think right now we're currently under the process of seeing semiconductors as a clear major winner for the next 3 years, right? Next 3.5 years, so all the way up into the end of this decade, while software continues to be not even an underdog. It's not an underdog at this point. It's a clear loser. All right. So as a sector, as a whole, as a subgroup of the entire tech sector. Does that make sense? Right. I know what I'm saying can be, it is speculative, but based on just what the market reactions are telling us, right? This is huge. Okay. And I don't think a lot of people are really looking into this a lot, which is the reason why I want to do the stream tonight for you guys, right? And kind of expand on what I've talked about in the market summary section of the CFO Report for this week. And again, if you guys are not part of the report, if you guys want to join, just simply take a look at the description box down below and you'll see the second link there that will lead you to becoming a reader of the CFO Report. So make sure you guys hit that description box down below, click on it, and you guys will see that the second link will show you the way. All right, so hey, what's up guys? Welcome everyone, welcome. To everyone just joining us now, you guys are joining us a little too late, but make sure you guys watch the replay as always. Okay, all right. So, with that being said, all right, with the fact that the markets clearly think semiconductors are the clear winners here, the overall software sector ETF or ticker symbol IGV, right, clearly has to take some sort of beating for the next 3.5 years. Well, guess what? If we take a look at the quarterly time frame chart of IGV, things aren't looking too bright as far as the future goes for IGV. Okay, because if you take a look at the 3-month time frame or the quarterly time frame, all right, let me just take out some of my lines here. Okay, so the current quarterly candlestick is absolutely horrible. I mean, I can say that, right? I mean, just take a look at this, right? Look at the massive top wick here, right? So the fact that on the quarterly time frame, the quarterly candlestick that we are in now made a higher high but failed to keep that higher high is clearly an obvious statement of what the market makers want in IGV. And what do they want in IGV? A clear breakdown to the downside. Yes, volume has gone up, but based on the previous quarter, right, the very first quarter's candlestick here, this was a huge injection of sell volume. I mean, just an absolute massive amount of selling, right, from institutions. And we mentioned this, right? I've noted this in Q1 of this year that there's a lot of institutions just selling a lot of software positions. And that resulted in 1.32 billion in volume, in selling volume in this quarter alone, compared to the average quarterly volume of 370.76, right? Million, by the way. So again, the fact that we haven't seen the higher high being sustained, and the fact that we're now back down to the lows and the previous quarter's lows range here, right, clearly tells me that, hey, this was just an oversold bounce. There's nothing much to it. This was likely a great chance for short-term buyers to get some trades in, and obviously some shorts to cover their positions if they're not really looking to hold for the longer term. But there's also a secondary chance for people who are now who have now realized that software is at its end here. It's in its death run, essentially, or unfortunately. And if I take out, okay, let's take out all my drawings here, right? Just briefly, okay? All right, even just my SMAs. How about that? Okay. There is a multi-year trend line that IGV is about to break, potentially. Okay, and the reason why I'm showing you this is that Microsoft is following a very similar trend as well. If you take a look at the 3-month time frame, okay, let me just hide my drawings here for Microsoft. Okay, very, very similar here, right? And for Microsoft on the quarterly time frame, it's already the quarterly candlestick here has already moved to the negatives, right? And I wouldn't be surprised if Microsoft ends with a negative quarterly candlestick. Right, 3-month quarterly candlestick, by the way. I'm just saying quarterly here, but again, just to remind you guys, we are in the 3-month quarterly time frame, right? Because each candlestick consists of 3 months, which is again 1 quarter. Okay, if you guys are confused what this 3M means here. Okay, so I think in some ways, Microsoft is almost leading the overall software sector, right? Even though Microsoft is the third largest holding in IGV. Yeah. So, I think IGV here has a lot of work to do, as in a lot more work to the downside, and I believe we should be seeing eventually a bigger drawdown in IGV where we break this multi-year trend here, right? Oops. Let me draw this again, right? So this could be a complete uncoiling of software here that has held this multi-year trend line, right? So, I think clearly there are individual software leaders, right, that have definitely gained a lot of benefit from being able to implement AI strategies and their own in-house AI software, or just their own in-house, AI, right? That they've been able to very quickly release to their clients, right, who are in the same ecosystem, so that they don't have to change, right, to other available resources, AI resources specifically, because they're able to have a very quick shift and just execute very well and very quickly in this very quickly altering AI environment, right? So we're going to talk about these companies very soon, but I think the entire software sector is doomed. Like I'm not trying. That's not just a hyperbole. Okay, I really think that IGV here is about to see some massive decimation in its share price. Okay, and if IGV does not rebalance its holdings soon, it's gonna meet its fate in this manner, right? What I've just drawn here. All right, so I really hope IGV can start to rebalance its portfolio where it can find more leaders to put in its top holdings. For example, its #1 holding is what? PanW or Palo Alto, right? And guess what it's been doing? Look at this massive green candlestick on this quarterly time frame, or on this 3-month time frame. So it's a clear AI winner, okay? And there are plenty of other AI winners here. Okay, let me bring everything back. All right. Okay, so we're gonna first look at let's go to the weekly time frame here, right? So I've given everyone at this point my own software AI winners that I've listed out, and at the start of this year and even last year as well. First was DDOG, Datadog. Okay, massive run up. They've been doing extremely well. They've proven with their numbers in the most recent quarterly earnings report that they have been exceptionally doing well, keeping their clients in their own ecosystem while implementing their own AI, in-house AI tech, and just their own AI strategies, right, to benefit from this overall AI revolution, right? So they're doing exactly what I expected them to do when I mentioned them that DDOG can be a very big AI beneficiary, right? I mentioned this back in like, I think the same month of last year, I think May or June of last year. Okay, and then Twilio, right? This is another one, right? Twilio has been integrating AI very well within their own ecosystem and keeping and even growing, massively growing their customer base, right? And their ARR, right? So, you know, I think Twilio has been doing absolutely amazing, and their share prices will continue to reflect that performance. Twilio, again, very, very nice one. The next one is MangoDB or MDB. This one has yet to really see the fruition of its AI efforts, but I would say it hasn't been slaughtered like its other tech peers, right? Software tech peers, right? I think MDB, yeah. So their market cap right now, currently, it's kind of in a fight between whether or not MDB is truly overvalued or undervalued based on the AI tech that they have implemented over the last couple of months. But we have yet to see. Again, they were pretty positive, right, in their most recent earnings call here, right, in their conference call. But we do need to see a bit more quarters of better performance, is what I would say, to really see if MDB truly has become an AI winner, or at the very least a beneficiary of AI. Does that make sense? Okay, and the next one is Frog. Okay, this is again massive AI winner. I mentioned this one early on in this year, right, along with the DOG, right? These are the animal tickers, specifically software tickers that have done extremely well implementing AI again. So do you guys see the pattern here, right? I gave you guys the list for potential AI beneficiary tickers earlier this year and even last year as well. So again, please pay attention when I tell you guys these specific things, especially when it comes to the overall macro perspective on the markets. Okay, all right, because a lot of people have really missed out on this AI beneficiary run within the software group, right? And again, there's a lot of people who are very much bearish on the overall software group, and for a good reason, right? For all the reasons that I've specifically stated in this stream and in previous streams as well. So yes, I do agree with them, but at the same time, there are starting to be clear AI winners that we've weeded out a long time ago. All right, so make sure you guys are paying attention, and make sure you guys hit that subscribe button if you guys aren't subscribed yet to this channel. All right, is everything making sense so far? Perfect. All right, you guys are really active with the those emojis on the chat room. Okay, so now we're gonna go over one more ticker here. Okay. All right, so this is CLOU. This is the Global X Cloud Computing ETF. So this one hasn't really fared much better. Hasn't fared much better either compared to IGV, right? This one's also, again, heavily software related. There is a lot of AI cloud computing stuff going around as well. But overall, it seems like the cloud computing tech is also being left behind by the new quote-unquote neo-cloud computing, right? So basically the neo-clouds are the basic infrastructure that AI needs, right? It's the very first step of AI, of building AI infrastructure, and that's where neo-clouds come in. And cloud computing has become kind of been put in the back burner, essentially, even though cloud computing definitely has seen major benefits with implementation of AI within its own systems, right? I don't know the exact tech. I'm not tech savvy. I don't know the exact terms, so apologies if I'm saying anything wrong regarding the AI integration within cloud computing systems. Okay, but Anyways, what I can actually read and understand is the actual market reaction and market prices on CLOU, or the Cloud Computing ETF. And just like what we saw with IGV, it's not faring much better, right? The weekly time frame is pretty bad. It hasn't gone anywhere since, guess what? Since ChatGPT first came out in November of 2022. Right, yes, it's gone up since those lows, right? Since these lows here, right? But if you go just a little further into 2024, we're back to 2024 prices here. Yeah, we can go all the way back here and say we were back to 2022 prices, right? We're obviously back into the 2022 prices here, right? Mid 2022, but we need to be looking forward, slightly forward, in the past. I know that doesn't really make much sense, but I really want to point out that the markets have been giving us slight clues, right? That's the reason why we're focusing in this area right here, right? Where the markets have clearly decided that, hey, there's been an underlying systematic change in the overall tech sector, specifically in the software group. And so the cloud computing ETF has gone sideways for the last 3.5 years, or well, not 3.5, maybe like 2.5 years, okay? Almost 3 years at this point, okay? And I really think this ticker as well, CLOU, will be seeing lower lows at some point in time, maybe by early next year, okay? So keep this ticker on your watch too. Maybe you guys can start shorting this one, who knows, right? But again, IGV, CLOU, both not looking good at all, due to all the same reasons that I've talked about for software specifically, okay, or IGV. All right, and with that being said, I'm gonna finish the stream here by looking at VIX, okay? So volatility has, again, come back down to lows, and when we're at these lows between 16 to 18, so the volatility regime has completely changed. And what I mean by that, okay, so sit down, make sure you guys are sitting down and writing this down. Okay, so since I would say since 2023 to around 2025, the lows of market volatility have absolutely changed, because we're the lows between these 3 years, okay, 2023 to 2025, or I guess 2 years. No, scratch that. Let me say since 2020, right? Ever since we've had that massive injection of liquidity, right? Since COVID, market volatility hasn't really been the same, especially when it comes to the lows, right? We were basically used to seeing VIX hanging around 12 to 14 in that range, which clearly gave us an understanding that the markets will be seeing lower volatility, and most importantly, higher highs and higher lows. A textbook uptrend, right? When VIX is staying at these lows between 12 to 14 value, the values are 12 to 14, right? But enter 2025 and this year, right? We've seen that market volatility low, right, change from 13 to, I would say, around 18. Right, so we're ever so close to the very critical value of 20 that indicates market correction, and we've seen multiple market vol expansions over that 20 value in the last 1.5 years, right, since 2025. So we have this completely new VIX or market vol regime here that we all should be very much wary about. Especially as we head into this time of technical weakness, the seasonal technical weakness that we tend to see heading into July, right? So again, I really expect VIX to be fairly, I would say fairly tame as we head into the last week of Q2 and the last week of June, all because of the fact that, hey, we're heading into another holiday week next week, where we're about to celebrate the 250th anniversary of America's independence, right? July 4th, okay? But next Friday, it will be a holiday week it would be a federal holiday because we're observing July 4th, since July 4th will be on Saturday. So July 3rd, which is a Friday, will be a day where the markets are closed. So I would expect market vol to be fairly tame leading into that short week next week, right? So I do have to say though, the fact that we've continued to stay in the 16 to 18 range this entire year, without trying to get back down to that 13, or at the very least 13 to 14, or even 14 to 15 range. All right, it's slightly concerning to me. Okay, we have gotten down to the 15s here back in the first week of June, but that resulted, obviously, as you guys see here, a massive reactionary move back to 20 here, right, indicating yet another potential market correction and obviously market volatility, and that's exactly what we got, right? A nice textbook pullback, okay, or even the you guys can classify what we saw here, right? A very quick textbook pullback or correction, because we got a yeah, I think, let me see here. I'm pretty sure it's a little over negative 5%. Maybe, yeah, okay. So it was almost negative 5%, right? So it was almost a textbook correction there. Is this making sense? All right, so this entirely new VIX regime, again, is slightly concerning, especially as we are about to start to see potentially a reversion back to seasonality trends. And seasonal trends right now tell us that starting from July, we should be seeing more bursts in VIX, right, and more sideways chop and pullbacks for the overall markets. And right now, it's not looking too good in the futures market right now too, I think. Yeah. Oh yeah, we're down negative 1% now overnight. Oof. Yeah. Oh, SPY futures is now breaking below its daily 10 SMA as well too. So hopefully tomorrow we obviously we're gonna get a gap down open. I mean, that's pretty much obvious at this point. But I think the very least, okay, at the very least, I think we can expect to see maybe a turnaround Tuesday, as SPY futures will most likely try to consolidate and move sideways between its daily 21, this light blue line, and the daily 10 SMA, right? And as long as it's able to consolidate here, right, within this range, we might be able to get one more final push up higher heading into the last week of quarter two, the last week of the first half of this year. And as we head into the quarter three timeline here for us, right? So maybe we can get some sort of action like this tomorrow. Nice quick turnaround, but that has yet to be seen. All right, that has yet to be seen. All right, well, that's it for tonight, guys. I really think that software is collapsing. I'm pretty sure people have been wondering what's been going on with software, but this is my kind of update here. I think into the next 3.5 years, basically into the next decade, at the end of the decade here, up to 2020s and into 2030s, we'll be seeing a complete decimation of a majority of software names, as we've been seeing currently so far. And there's going to be a massive consolidation of software names as the AI winners clearly begin to understand their own position and start to actually acquire companies that have been either failing at integrating AI on their own, or they'll start to buy companies that have recently begun their AI journey, but they were too late, so they're not able to keep up with the very quick changes that AI has been showing so far. So yeah, that's my position on software. Hopefully that really answered your question. And again, AI clearly has been giving us the answer as to what we need to be focusing specifically on for software, but the overall answer is yes. Software is collapsing. That is the answer that I'll be giving you guys for tonight to end this stream. All right. Hey, Joey said you're definitely looking to short software. Let's go. Yes, yes, yes. Okay. So make sure you guys watch the live stream replay here if you guys are just joining in now. But again, thank you guys so much for watching. Thank you guys so much for the likes. Thank you guys so much for subscribing to the channel. We are officially nearly at 1.4 subscribers, right? 1.4K subscribers. Absolutely amazing. We're still on our way, definitely on our way to 2,000 subscribers on this channel by the end of this year. So let's have a fantastic rest of the first half of this year and into the new second and last half of this year. All right. Have a great rest of your night, and I'll see you guys on Wednesday at the same time at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Thank you guys so much for joining me and watching, and good luck tomorrow.